Hi, everybody. How's everyone doing? Hello, Alexander, Scott. How are you? Hope you got some rest last night, buddy. Take a look around. We have a little bounce in the dollar. I'm thinking maybe back to this resistance level. Hi, Laura, Paul. Maybe back to this moving average here on the 4-hour, 90.70, 90.80. That would be back to where the number was on Friday, around the low where it really accelerated. So it's possible we're headed back here towards this 90.70, 90.80 level where it should be rejected. Otherwise, something else is going on if it starts closing above these lows. Remember how these lows held for a little while? This 90.80, 90.70 level. So old support should turn into new resistance if the bear market in the dollar is a continuation move. And when you look at the daily, it sure looks like we should clean out stops here. Clean out stops for a new low for the move, which makes me constructive gold. So, they're trying to sell it off, but it sure looks like a flag. I know there'll be some divergence up there. Maybe there's one more scalp to the downside. Silver failed again yesterday at 27.65. So if that's a 61.8 level. I don't think you want to be short if it takes it out. In fact, I don't think you want to be short. Scalp work Monday, but we still have a confirmed high on this time frame. We're looking at the 4-hour. I don't know, the 2-hour as well. So that's what's going on. Hello, Rena. In the dollar. So had a little slight turn yesterday in NASDAQ. I don't think it's done. Momentum is still pretty strong to the downside, right? So there could be another low coming. And S&P's nice area by the team yesterday. They talked about 41.10 had to hold or it would turn uglier. And that was the low, 41.10.30. So that line in the sand that Blake has, Steve has, pay attention to it because, that could take us back down to the 4,000 handle, low 4,000 handle. But rallies back to 41.80 are going to be important to be rejected for a continuation move of this. And, I was looking at this and, I do some self-talk. And it doesn't look like it's even a possibility now, and it probably isn't. But when I look at this NASDAQ chart, to me, it looks like we have two drives here. 1, 2 shows up even, and this is the weak sister, right? Even shows up better on the weekly. See that? And I talked about that last week. So if the NASDAQ can dig in its heels here, we may end up with a classic 3, right? And make a new high maybe into the end of the month. So, we're still on a 2-week sell. 41.75 is the off number in the S&P. So it's only Wednesday. But yesterday it looked like they were starting. Really? Oh, I don't know if that's a reason why. But they did start rotating because, you just look at the closes on the day yesterday, and NASDAQ was able to post a little mini reversal day. This candle right here, I don't know what the candlestick term on that would be. So if we could start penetrating these levels, maybe we end up with a 1, 2, 3, and they stuff the sell in May and go away people because they're feeling pretty confident May 12th that we topped and we're heading down. So self-talk, I said yesterday, Dale, keep an open mind. It still is possible. It's been a prolific bull market that they could squeeze out one more high for a 3. Although there have been many times I've waited for a 3 and 2 was enough. Okay. So small long, I don't make trade recommendations in here, Josh. That's up to you. I'm just giving you my analysis. We're all captains of our own ship, right? So enough of my love life. Yeah. Dixie turning. Thought it, like I said earlier, I don't know if this is going to be a real important high, or I think we should just flush to new lows here. We'll see. So, I mean, euro is weaker than cable, so that's a good reason. Maybe the euro pulls back towards its 21.5 area, 2050, 2070, 20.5. Okay, interesting. At the yearly open. Okay. So what a great observation. So we're in May back to where we started the year in the Dixie. So here was the beginning of the year. This, yeah, okay. So we're right around there. We made our lows there at the beginning of the year. Seinfeld George was a very good stock trader. That was a great episode. Looking at oil, and that's another reason why I think there's potential for another high. So earlier in the week, last week, scalped it. Being short anything right now, except maybe the dollar is counter trend, but looks like we're going to make a new high for 3. I'll be interested to see what happens with the RSI on multiple time frames. Shorter time frames might confirm it, maybe not, but it's morphed into what could have been a head and shoulders to, I think we're going to get a third drive in crude. Okay. Any questions on anything I've talked about? US dollar yen is trying. So we'll see. Double bottom at the 61.8 level. I think there's a pattern in play long here by Grega. And I think Grega's back on the long side of gold. Join the service and you'll see what kind of objectives he has. They're fairly aggressive. And that's what I have for now. Interest rates, just a quick update, getting a little pullback here in yields. This is what's containing it right here. So if we just get through this level, 148 to 63 is going to take it up here. So may move sideways here. Maybe that'll give the markets a chance to recover. So Blake, is this euro pullback here something you're going to be looking to? Is this something that you'd be looking to buy on weakness here?
Well, I don't know. And good morning, Dale. We have CPI today. So the inflation, the inflation data is it's kind of like the highlight of the week. The thing, well, here, let me go ahead and I'll take over the screen here. That's the thing that, we are looking towards this week. It's like we
have two numbers, don't we? CPI and PPI.
And it's not PPI. We just have CPI data coming out this morning, and the market's actually looking for it to come off a little bit from last month's reading. Just the headline number, not the core number. The core number is expected to stay the same at 0.3%, but our last reading was at 0.6%, and we're expecting this month at 0.2% on CPI. And so I guess. And you can see it right here. Here's data flash, by the way. You can see that this is the numbers that we're looking for, 0.2% versus 0.6% last month. If you don't recall, and Craig asked about this, and I remember the data from last month. The data from last month was a beat. And guess what the dollar did? It went down. So I don't know why at the time that the dollar went down. Maybe because it's like, okay, well, the data was stronger, but not strong enough. So I don't know what the market is going to be looking for today to realize that it is a strong piece of data. I think if we come in with another beat, that might actually show the market that, hey, maybe there is sustained inflation, like higher inflation. And if that's the case, maybe that starts to get the market's attention. After listening to some people over the course of the last couple of days following the non-farm payroll jobs numbers that we got on Friday, the market really is thinking that, the data that we saw is irrelevant. We're going to see a bounce back in jobs. And that's, just something that, we're going to continue to see. But they might also, if the tune is, we're going to get better jobs. The jobs market's going to come back, and we're going to continue to create jobs, but we're going to get sustained higher inflation. Maybe that starts to get the attention of the market, and that's what I think we all should be paying attention to. Is okay. Well, is this data strong or is it not? And if it's a weak data, I think you got to sell dollars, and that's why this euro dip here is. Maybe that's all it is, Dale, is just a dip. I don't know.
Yeah, after last week, last week I thought that we were going to have a pretty good bounce. I thought maybe this was going to be it with the market rolling over. But after Friday, it's pretty hard to not think they're going to go for the lows and clean out the last of the dollar bulls they're trying to hang on. So my tune has changed.
Yeah, I'm sitting here and just price action wise, looking at the euro, the move has been fairly,
orderly.
It has been. We had a nice move higher in the euro, and we've just consolidated those gains. You can see, and let me delete this really quick. I'm going to delete this previous fib, and I'm just going to highlight this in the euro. This is a 38% retracement. That comes in basically at 2107. Okay. And you could probably just do this. This will be easiest, I think. Okay. And this is the way I'm going to have to view it for right now, is I'm just going to have to view the euro as more of a flag pattern. And so, and you guys might have seen my post yesterday, and I'm just going to show it to you just if you haven't seen it yet. Let me see where did we put it? Okay. Dollar Canadian nearing long-term support. Okay. And this is the long-term charts of the Canadian, and, kind of my thought process here. I'm looking at the dollar, and the dollar looks weak, and going into the CPI data, I'm looking at the Canadian dollar right now. The Canadian dollar is only 20 pips away from, trading below the 2017 lows. That's think about that, Dale. Think about this. And actually,
it's unbelievable.
It is. And this has been a really strong move. And look at how the support right here at 2017. Wow. I mean, we're going to start trading down levels we haven't seen since 2015, here shortly. I personally, it looks like it's going to break down. So if the dollar Canadian is breaking down, then that probably means that the euro dollar is on its way, to 122, maybe 123. I do think that the dollar Canadian move below that support, it may not be sustained. But as I wrote in that article, and by the way, if you guys haven't seen this here, you can read it just so you can kind of get my my thought process here. I'll just put it in the chat box so you guys have it. And by the way, there's some just there we go. I'll put it in the chat box for you guys. Just take a read, and this way you can kind of see that I do believe that the dollar Canadian can flush through these stops, and that is a risk to the dollar just in general. And we could see the euro dollar reaching for this like 122, 123 level. So I'm not keen on being long the dollar, not right now, unless the CPI data is a really big beat in the market. And not only does it have to be a big beat, but you have to see the dollar positively respond to that, because last month we didn't, right? Last month we had strong data and the dollar still sold off. So, is that possible today? Sure. I mean, let's say CPI comes in at 0.4, 0.5%, and for some reason they just turn around and start selling dollars again. We've been talking about, Dale, this phenomenon that we've seen over the last couple of years of the dollar just being sold, no matter what, and what the risks are that are around that. And when you're only seeing the dollar move higher when it's risk off type of currency, and we're not seeing any type of risk off, that doesn't leave any room for the dollar to really bounce, right?
I don't know what the reason could be, except for the market perceiving the Fed changing course. So Yellen has her hands full because she said she wants a strong dollar. She talks out of both sides of her mouth, but I think the dollar's a sacrificial lamb because it's the easiest thing to do for them to debase it, give us an edge on trade, and have more of an invisible type depression. I think Rickards talks about it. An inflationary depression is a little bit more invisible than a deflationary depression. So stagflation, as Steve would say. Yeah.
And you're right. And Janet Yellen, she has to talk out of both sides of her mouth, because look, she is the Treasury Secretary now. As a
they all say that, don't they?
I'm sorry.
They all say they want a strong dollar.
They have to. Yeah, I think that's like I think it's like written in stone somewhere that they have to somehow say that. But that doesn't necessarily mean that's the case, especially with Janet Yellen. But I don't see any reason to be long dollars unless we see risk aversion pick up, or we see really sustained inflation, higher inflation. And we already got one of the reasons why I'm not super excited about the dollar right now is look at the jobs picture. Last week really was not a good look for U.S. jobs. And
where's TSI on Euro, Blake? Is this getting up towards the 80s?
If I can pull that up, give me a second. Let's see where this.
Last I saw it was in the 70s, so figured
for the euro.
Yeah.
So daily sentiment for the euro right now is 75.
Okay.
It's 75. And so it's still not, it's high, but not abnormally high or extreme high. So I think that the euro could stretch further. And I look also, let me just take a technical view here of the euro. If you take these highs back in January of this year, then you take this previous high right here in February, right? And you can see like we've broken that trend line.
Yeah.
I think while we're above this 120.70, 120.80 level, it's really hard for me to be bearish the euro right now.
Yeah.
And just just so you guys know where I stand, and I know the ForexAnalytix community does, because they watch me on the Morning Edge webinar, which is in about an hour's time. As long as we're above 120, I'm really not a euro bear. we'd have to get all the way back below 120, 119.90. Actually, these previous resistance, which is acting as current support, we have to get all the way back down there before I really, am convinced that the dollar is ready to turn. And that doesn't necessarily mean that I won't play the dollar on the long side. There's certain currencies that I tend to play the dollar on the long side against, but the euro is not one of them. Not at this moment, because even if we get a period of risk, we get a period of risk aversion. I would be more bearish the Aussie or the Kiwi or maybe even the Canadian, but not so much the euro. We have to see a lot of risk aversion or a really significant move lower in asset prices for me to start thinking, okay, maybe the dollar is going to pick up some steam here. So against the euro. So right now, I the euro may be more range bound than anything, but I don't even want to be bearish near term the euro. I think the euro, you could just buy dips while it's above 120. So anyway, I'd love to hear a view of Stelios. Let's see if Stelios or Steve is around. I'm not sure. Steve, it looks like Steve might be stuck in traffic somewhere. I know your kids are back in school. How nice is it to have your days back there, Stelios?
Yeah, it's great.
I'm not gonna lie.
After 4 or 5 months of homeschooling, home classes, yeah, it's a nice change.
But I heard, Sel, that you're taking on kids in the neighborhood for babysitting.
Yeah.
Babysitting.
Anyway, no, it's all good. So we have CPI today, like you said, Blake, and the interesting thing is that I personally usually look at the year-on-year number of CPI because it's a little bit more stable. Month on month you can get a few, let's say, more erratic prints. But this month and next month we have to be very careful because last year May and June prints were very low because of it was the start of COVID and the lockdowns. So year on year, we could get. I think we're expecting. Let me have a look. 3-point-something%. What was it?
For CPI?
For CPI year on year, yeah. 3.6%.
Oh, year on year. I'm not sure what
3.6 we're expecting. It could go above 4%, could go, really anywhere. I just want to say that
2.3% right now.
Yeah, before people panic, just remember what this is indexing.
I would say a panic number is above 3%. That's when people start going, it starts raising some eyebrows.
Oh, you're talking about core CPI, yeah. I still think year-on-year number, unless it's a ridiculous print, I think we should ignore it. The month-on-month is on the next 2 months is probably more representative. Anyway, inflation is going up. That's for sure. If you look at copper, if you look at nickel, or all sorts of base metals, lumber, we've talked about so many times. The cost of goods is going up. End of story. So I think inflation is here. It's not going to be transitory like the Fed say. I think it's something that's going to remain. And I've said this before. I have a few ship owner friends who are just going all out with new builds and buying used, on the used market or new builds. They're just loading up on ships, and they think this is going to be going on for a while. And these guys are not stupid. They know what they're doing, and they've been doing this for years and years. That's why they're millionaires or billionaires. So I think inflation is here to stay. So how do you play that, and what do you do? It's an interesting one. The dollar, I've said before, I think the dollar is going a lot lower, and I've said that ever since the DXY was around 100. But the danger is always for a little bit of a short squeeze when we get to really extreme levels on positioning and DSI. We're not there yet, but we could get there. But personally, if we see a weak print in inflation, I think I think the Fed has even less reasons to be doing anything. So that's going to be bad for the dollar, that's for sure. And
it's going to be horrible. I mean, think about like the jobs data we just, let's go back to like this last week. The jobs data was horrible, right? It was a big miss. Let's say CPI is a miss as well. And people come back today and they say, well, that was the data that we saw, today was just, it's a one-off, it's going to bounce back, blah, 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 blah. Well, you still have another month before you get jobs data, and then you get inflation data again. You know what I mean? And, even though the Fed might be more focused on what's happening with PCE or maybe producer prices, or maybe, what's happening with wage inflation. But fact of the matter is we're not going to get data again for another month. So we're, you should almost hope that we get a weak print today in CPI, because then that'll just kind of free us up to just be short dollars, for the next couple of weeks. You see any type of spike up, you just, like this dip down in the euro, you use this as a buying opportunity. Like today, I'm kind of hoping that the euro dips below 121 here, and I can pick some up this morning. And that's what I'm looking for, as long as the data is not too abnormally, hot, which we're going to look at here in just about 4 minutes. So, Stelios, do you have any final thoughts before this data comes out? I mean, we got 4 minutes. I know you've been looking at, well, actually, let me ask you this. I know you've been hot on, gold and silver. How do you feel about them here? Because I want to say that silver really struggled and hit. Here's the silver chart. Silver's struggling at this 618 retracement, and you can see that this 2765. I know we went a little higher than that. We went to 2780. We're kind of struggling here. I mean, are we going to be able to break out, or do you think silver can finally break free above 30? If
I think it will eventually. We are at resistance, so it's like Steve said yesterday. It's likely we might see a dip. And I have been long from below, so I'm happy to remain long. I'm not gonna try and play the I'm gonna sell here at resistance and buy again lower. I have a long-term play for this, but I do think we could go, come back down towards where is the level?
Sorry.
Well, anyway, no, we could get back towards 2650 or something like that very easily, but my long-term view remains the same, and as long as we have, loose monetary policy, real yields remaining very negative, there's nothing, and the dollar underperforming, there's nothing that's going to change my mind. So I would, if I wasn't long now, I would be waiting for a dip, exactly like you show. And I think gold is, what is it, just below 1800 or something like that. Anyway, I think buy on dips is it would be my strategy if I wasn't already long. But yeah, I think the long-term thesis is still intact for me, no doubt about it.
All right,
remember,
gold.
There's one other thing. There's in June there's this Basel III whatever regulation that there's a change in regulations which makes gold a tier 1 capital. There's a lot of details behind it, but basically it means that it's going to make it a lot more difficult for bullion banks and whoever are short, naked shorts in gold and silver. It's going to make it a lot more difficult because they're going to need to have a higher percentage of actual holdings. So that's something that's coming in effect in June, if I'm not mistaken. So
wow, okay,
just something to keep in mind.
That's good to know. Looking at the chart of gold reminds me a lot of silver right now. Same type of bullish, kind of setup. So let's see if we get a weak number here. How much time do we have? We have
50 seconds.
Less than a minute, right?
Yep.
Okay, so I know I have it around here somewhere, but I'm just going to pull it up again. Here's data flash. Let's go over to the euro. I'm going to keep it on the euro. Usually I like to watch the yen pairs, but in this case, I'm not so concerned about the yen right now, because the yen, the 108.35 is really trendline support. It's also been really key pivotal area for the pair, and everybody ForexAnalytix peeps know that 109.65, 108.35 is kind of what I'm watching there. But I'm going to be watching more of the euro today, because like I said, I wouldn't mind buying a little euro on dips here. So here's your 15-minute chart. Here's your data.
Okay, any second now?
Any second. Woo, strong data. Look at
Yeah.
that. And let's see if we can get
Look at that. CPI year on year 4.2%. So you see, we said it might be above 4%.
Wow.
Month on month is a lot stronger. Yeah.
You got your wish on a dip in the euro.
Yeah, I'm thinking, watch this. Hold on really quick. That's the 50% retracement.
Are we getting to stagflation?
The S&Ps don't like it.
No, they don't. S&P is really starting to come down here. So the
Yen
euro,
likes it.
I just picked it up at 83, just so you guys know. Actually, 82. Sorry, but I don't know if I'm going to stick around. No, let's see if we can hold here. Wow, the dollar index is bouncing.
Well, 90, 70, 90, 80 should be resistance. That's where it really accelerated Friday. So we're not quite there in the Dixie.
Wow. It just bounced to my break even and I sold it. And I sold it just like a loss of 2 pips as it got to 80. And I'm just like, wow, I just took it right off the table. So I do not want to be short this or long this thing. I just took it off. So screw that. That's some really strong data. And with really strong data, it's gonna weigh on futures. It's gonna weigh on gold. It's gonna weigh. Let's take a look at the yen pairs here. Screw that. I don't want to deal with that.
Yen's going up. I'm surprised the 10-year hasn't had more of a pop. It's only up 1.8 bips. So
watch all these yen pairs. Like I would watch the Aussie yen. Remember, this is a false breakout from this week, right there. Kiwi yen, right there. Euro yen. If we get below 131, then it starts to turn bearish. So actually, the euro is back at that 120.80 level. You probably, want to be looking on at possibly selling some up here. I guess I should have been a little bit more patient, but I think if you can get a move back up towards 121, maybe that's not a bad area to be on the sell side. Hey Dale, I don't want to take away from your interview. I know you have an interview coming up. I'm going to let you go, but hey, in the meantime, guys, make sure you check out Trader Summit. I was telling the guys and gals from the daily roundup. This is one of those sites that I think you can like in the morning, you can come here and go, oh, I want to read, Mark Chandler's piece. I want to read Boris and Kathy's piece. You can get all in one location. It's kind of nice, especially if you're just getting in front of the computer and you want to get up to speed with what's going on overnight. Check out Trader Summit, and I'll let you go. I'll let you take over from here, Dale.
All right. Thanks, Blake. Good hunting the rest of the day. Hi, Alex. Thanks for your patience. Important data that we had to discuss for a minute or so. Welcome back.
Completely understandable, man. Can you hear me?
Yeah, got you, Alex. Great to have you back.
Yeah. I know there's important numbers for you guys, so it's all cool.
Yeah, we're leveraged at 20 million to 1 on our position. So anyway, very nice to have you back, Alex. You want to share your screen? And
yeah, I'll get
really looking forward to seeing what's on your radar. Since we talked about 3-4 months ago, it's that little green box, share screen.
Okay, you guys see SDRC? See this?
Nothing yet.
Nothing yet.
And while we're waiting for Alex to share his screen, and here it comes. Alex, for you guys that weren't here last time, when Alex was here, he has one of the most remarkable stories of someone breaking into the business and making it work, having, really no other options to make money to invest. He joined the military, took the most dangerous part of the service he could because that paid the most, poured all his money into OTC issues that came home for him when he came home, and has a great career as an investor and guiding other people, and really a remarkable story. should give all of you hope out there. So, okay, continuation move that you're looking for, Sydney Resources. What do they
Yeah,
do?
so last time I was here, Sydney Resources continues to be, I guess, my main focus in the OTC
Okay.
land.
Okay.
Just because I think they're a very good image for legitimacy. Okay. Like the OTC, it struggles a lot with legitimacy.
Yes.
And you know what I mean by that? 99%
Yeah.
of them are scams, right?
Yeah.
And
It's like a lot of these CEOs just start a company so they could have their own Federal Reserve, which is their shares, is their
exactly.
currency, right? Okay.
They print shares to themselves and they hit the open market with them in
Yeah.
various ways. A
Yeah.
lot of them shady.
Yeah.
But I've liked this one, right? Because this one has always, I guess in my book, done it all right since I invested. The last time I was here with you guys was back in February. So it would have been right in this like 3 to 4 range.
Yeah.
And as you can see, we've pushed up near, all the way up to almost 9 cents. There's a lot of positive things going on with Sydney. They have a really, really historic thing going on with Lucky Ben, okay, in Warren, Idaho, okay. And so in this particular mine that they have called Lucky Ben, it had been blocked since the 1920s, okay.
Why?
And
government?
it would have been back when Roosevelt was blocking all the tunnels.
Oh, okay.
Yeah.
All right.
And what was happening is this was a severe block in a very hard to access area. If you're familiar with Warren, very, very difficult access for a mining area. It's all mountain, like it's just straight up mountain, and it's very hard access. So a lot of people made fun of Sydney, saying they would never get in there. As an OTC company, it would just never happen. They would never get the money or the follow through to make it happen.
Last laugh is on them. Still with me? Alex, think we lost him?
Yeah, I think we lost him too, Dale.
Yeah. Okay. So you could hear me. So it's him.
Yeah, it's him.
Okay.
I can hear you just fine.
Okay. So I'll wait a minute or two, Blake, see if he logs back in. I'll send him a message on Twitter. And
yeah, I mean,
anyway, did you hear his story, Blake?
I remember it from last time. I think he's kind of a younger guy, and
yeah, he was working, as a waiter. He didn't come from any kind of wealth, and he wasn't making enough money to invest, and he wanted to invest, so he joined, I think it was the Marines, and took the most dangerous assignment possible to get paid the most for doing it. I think it was in prison guards or something like that. He wanted to be like on the bomb squad, but all the money he made when he was in Iraq, he invested in these OTC stocks, and they all worked for him. And while he was overseas, he came back and he had a new life.
That's awesome.
Yeah, I mean, but that's someone really going all the way to have investment capital to work with, that you'll lay your life on the line for it. So
yeah,
that's
and
desire.
combat duty pays. I'll tell you, it pays like triple. Now that doesn't mean if you go on as, because I had it for a few months when deployed in Africa. It's like and I'm like, man, I could have used that for like, if I would have done that for a year, it would have been great.
All right, I'm back, guys. Sorry.
All right.
Yeah, hey,
that's okay, buddy.
My internet just it's, I don't know, went out.
Okay, well you're back. So all you have to do is reshare and talk about. And I was telling Blake was a Marine. I told him your story. Also, when you're looking at these OTC issues, I worry about it when I do certain ETFs. Do you worry about them doing reverse splits on you, Alex, when you're in these?
Many times. So, that's a big thing in OTC, definitely. anything that is running, like what I mean is like having a long-term uptrend like you see here.
Yeah.
Yeah, you have to watch debt and you have to watch share structure, right? Because if there is some sort of motivation there or reason for them to RS, it's likely going to happen. So research is really important. Like you have to understand what kind of debt these things carry, what kind of convertibles these things carry, who has shares, and what that share structure is exactly like, almost on a daily basis. It's not like big boards where you can just kind of let that shit fly. You actually have to like pay attention to the share structure every day.
You have to be kind of a CIA agent to be in front of these guys, because they do announce reverse splits, but it's too late to act after that, isn't it?
Oh yeah, you're toast.
It's already in the price. Okay.
Yeah, and usually when an RS hits an OTC next day, it's down like 60-70%.
Yeah.
To give you an idea.
Okay, so dilution is one of the major things you have to worry about when you go into these kind of issues. Have they done any? I'm looking at this chart, and it goes back to last year or the year before, and there weren't any reverse splits from what I could tell from the chart, were there?
No, SDRC. So I've been with SDRC Sydney. I've been invested since August of 2019.
Okay.
And no
like
reverse splits. There have been some very, very small increases in the public float. I think when I got here, there was probably about an 80 million public float. We're up to 101 million public float now after about 2 years. But what's good about that is it's all been used, like I said, to get that tunnel clear, to get the contractors. Basically, none of it's going into management's pockets at all. These guys have never taken a paycheck the whole time they've been here.
Yeah. So it almost takes like the kind of gumshoe analysis that, a lot of people used to do. They go and meet management before they bring their investors. Really kind of like on the ground intelligence. You really have to stay on top of it. Because most of us, Alex, are, we'll look at a chart, and if it's a nice formation, we'll go with it.
Right.
Not knowing what lurks behind the candle.
Yeah, definitely. That's a big issue in the OTC. A lot of new traders just get destroyed in a matter of weeks.
Yeah.
Because a lot of times they're looking for in the OTC that get rich quick thing. And I always tell people it's not the way to do it in the OTC. Yeah, I know there's a lot of big fast movers out there on a daily basis, but that's how you lose it all really fast. I find quality, at least that's what I try to do. I try to find the best quality that exists out there in the market, the ones that I believe have a legitimate shot of going QB, which is their form of uplisting, and then eventually going to hopefully NASDAQ. That's what I look for. Is that legitimacy, and these guys really have it. What I've been focusing on more than anything is just mining in general. This is one of many. Another one you guys might find more interesting is VINs too, because of their connection with Hecla.
Okay, is it silver?
Yes.
Okay.
Yes.
Nice chart.
So this is Vindicator Silver Lead Mining Company. Okay.
What was that big volume spike? Earnings?
OTC
News?
updates starting.
Oh, okay.
Okay.
All right.
So that big spike was them updating OTC markets for the first time in 17 years. Okay.
Wow.
This is a very historic silver miner revival. Okay. They're about a mile walk from Lucky Friday of Hecla. Okay, to give you an idea.
Okay. All right.
And
wow, all the names of the mines and everything. All right.
Oh yeah, I will actually be up in Idaho in August doing on-ground research, a Lucky Ben, and a lot of these mines, just to make sure my DD is as solid as I think it is.
Yeah.
I do so much research, man, hours and hours and hours. It would blow your mind.
No, it wouldn't really, because most people I know that are successful, are very hardworking people. And, you know, you can't, you know, some people think all you do is click a button, but really it takes a lot of, you have to weigh so many different factors, especially when you're in the wild, wild west like you are. And I think people are going to learn that lesson in altcoins too,
Oh,
don't you
yeah.
think, eventually? I mean, what do you think about this? I mean, you're a speculator. I mean, you go to the upper
Right.
end of the pyramid in equities by buying OTC stocks. What do you think about what's happening in crypto and the alt space? Do you follow it at all, Alex?
So, yeah, of course, you know, it's not my expertise, but what I will say about crypto in general is I have been around for a lot of the biggest hypes recently, like with EV and with especially marijuana stocks, right? I saw it
Okay.
with
Yeah.
MJ. I think MJ is very comparable to BTC in a way with stocks anyways.
Okay.
And all I will say is what eventually happens is regulation. Like those stocks, the marijuana stocks that I made my money on back in the day, and that went on the most historic runs, made many millennials millionaires. And everybody thought it was going to be the greatest thing for years to come. Eventually, somebody comes in and puts the boot down, and companies got suspended, companies got delisted, laws and regulations were made, CEOs were looked into, companies were looked into. And I just think that it's too good to be true. Somebody's going to step on it eventually, and a lot of stuff's going to change.
Okay, so for that arena, the marijuana stocks, who was the enforcer? The SEC that came
Big
in?
time.
Okay, so for Bitcoin, since they're not regulated yet, do you think it could be like Gensler? I think is pro crypto, the SEC chairman.
Yeah.
But then you hear people like Yellen, who is not pro crypto, and it really is competition for currency that currently is under pressure. So why would the U.S. government continue to let this happen?
That's
You
where
think
I'm at.
that's a boot? You think that's a boot that's coming for crypto?
I think something's coming. Yeah, I think somebody big is going to put the boot down, because it always happens. Eventually, I've never not seen something like that happen on markets that are raging. They aren't just going to let it continue, you know, unregulated, and you know it's not going to happen. That's my bet.
Okay.
I think it's going to be ugly when it happens. You know, I think at the end of the day, the key is just be diversified, right? I always tell people I don't see anything wrong with owning crypto, because obviously there's money to be made, but just don't bet all your money on it, you know?
Yeah. So I'm getting a question. Brock, is that a miner? Are you familiar with this, Alex? ABXXF?
No, it sounds like a Canadian thing.
Okay.
To be honest, I don't really touch the F stocks, at least in my arena.
Okay.
And I'll be honest with you why I don't. And it's because a lot of them at this point have created a bad reputation for themselves in the OTC arena. They have been some of the worst toxic liars, debt converters, you name it, is the F stocks.
What does the F stand for?
What's that?
What's the F stand for? You're talking about the F stocks.
So that's just like when they're dual listed for Canada and the OTC markets, they get an F symbol after their ticker.
Okay. See how I learned from you? I'm learning a whole new arena I could get into trouble. Yeah, it's listed on the NEO and Toronto, and it's a technology company. Okay. So have you made this, you were talking about making this conversion to mainly, I mean, you're showing me a miner here.
Yeah.
So you're making this conversion to strictly mining being your bailiwick going forward, and no more of the marijuana stocks, etc. Right?
Yeah, I follow trends to a certain point. You know, back in 2011 to 2014 range, I made a lot of money on the marijuana space. That's what was hot. The last couple years, and I believe the next few years, I'll be very focused on gold, silver, metals miners in general. I believe that is where we should be heading these next few years. I believe that's where, the big bets should be placed, is on gold, silver, and miners.
A very good friend of mine that I've known for eons. Okay, he's has his own BD, but he's very good in the mining sector.
Mhm.
And he was talking to me about some smaller producing juniors, and that all of these many of these miners are ripe for takeovers. Does that go into your possible due diligence for what would be a good takeover candidate by majors or bigger?
100%.
Okay, so
you are looking at one right here, Dale. So VINs right now, they are an active lessor to Hecla. So they actually have power over Hecla on the mine that they own. And it's special because this is only a mile away from Lucky Friday, which is, Hecla's main silver producer in the area. So what we would expect is, why wouldn't Hecla in the very near term, with how strong their revenues are right now, what do miners do on the big boards when they bring in record revenues? They expand and they increase their reserves. That's what mining companies have to do. So a lot of times what I'll do is I will target companies just like this, VINs, who I know is reviving in the OTC with a very clean share structure, clean financials. They're very close to Hecla. If Hecla needs to expand to increase their reserves, they're expanding right into VIN's territory. So one of two things will happen. Do they keep paying VINs crazy lease fees? And, because right now I believe VINs is a 40% net profit on whatever Hecla pulls out. So do they keep paying VINs, or do they just buy them out? And in my opinion, a lot of times the smarter decision for Hecla would be just to buy VINs out.
What do you think the takeout number would be for them? I know you have one in mind, and we don't hold you to it, but if they were to be bought out by Hecla, would it be close to $1?
I believe it would be over that. A lot of these mines are usually bought out for anywhere 25 to 50 million sometimes. So, with VINs, I think their market cap right now is only in the 5 million range. This could get some range to it if they got bought out. But I think what is also more exciting about VINs is they're actually reviving on the OTC, which is why you're seeing that volume come in.
And what's revival on the OTC mean?
So
what's new about being revived? They were dead and now they're Lazarus and they're rising from the dead, like that?
Yeah, kind of actually, right?
All right.
What it means is they've had no website up. They've turned in no financials, no filings. They've been literally a dead public company for 17 years.
Wow.
Okay. Yeah.
All right. So as the higher prices of silver, what brought interest back into it? There been a change of ownership in the 17 years that they were in a coma?
Definitely silver, definitely Hecla, but with these in particular, VINs and the other ones the guy owns, this is the Magnuson family. Okay. And you can look up the Magnuson family when you get off the video with me. These are the sons of the famous Magnuson father. And the Magnuson father was a mining magnate in northern Idaho. He basically sold to Hecla what a lot of what they use now. So Lucky Friday and stuff originated from the Magnuson family. You can do some research on him. He was a huge landowner, mine owner up in northern Idaho, very famous family, very wealthy. And
kind of like the Cartwrights on Bonanza.
Yes.
All right.
The sons of that father have now decided to, I guess, carry on that legacy. VINs is one of the mines they are reviving.
Okay. All right. Yeah. I wrote that symbol down. So let me ask you this. I see the little dots at the bottom. Like right now it's trading, what, 5 cents? What's the spread on an issue like this? The bid offer, is it pretty wide?
So on something like Vindicator, it's very wide.
Yeah.
I think yesterday we were looking at 51 cents was on the ask, and I believe it was 41 cents was on the bid, to
Okay.
give you an idea. So it's like a 10-cent spread.
Right.
For the people that are, I guess, just jumping into OTC, I would tell them, maybe stick to something it's a little bit easier to understand, like an SDRC. Because it's a little bit larger of a float, a little bit tighter, a little bit more liquid, a little bit easier to understand. For someone who would be just jumping into the OTC bins, with how low that float is, it can get scary. It can trick people. It can be confusing for the new trader.
Okay.
But
right,
like
so-
I said, this is a special one too. They're going into production this year. Sydney Resources is, for the first time ever. You can check out their financials. They have no debt on the books. They've done it all right, guys. And it makes me so happy because, it's rare in my land to see this.
Okay. Yeah.
It makes me smile.
All right. Yeah, it's an ascending triangle. Has a nice objective up there. I really appreciate, Alex, you coming in here and sharing some of your picks, because I know you put hours and hours and hours into being a detective to find these and then go through all the regulatory filings before you put your money in or would even talk about it to people that follow you. And really another great interview, and appreciate you giving us time. Are you doing anything where you'd like more followers or people to follow you on Twitter, or are you setting up a little community where people could go and hang out with you?
I guess right now, Dale, just keep an eye out. I think I mentioned to you last time, at the end of this year, might even be a little bit sooner, I'll be taking some companies public myself.
Wow.
Yeah.
Yeah.
A lot of people have
Okay.
been waiting for me to do it. And I'm going towards the mining and exploration route myself. I'll be working on taking companies public and getting some mines into production myself.
Wow, that's really cool. You know what?
Yeah.
Anyone that did what you did, and it wasn't just a flash in the pan because you didn't make a score when you're overseas and piss it away, like a lot of people would, is really something that I think is admirable. And now you're stepping into a new arena full of barracudas, including regulators, and I admire your courage and tenacity, Alex. Thanks for
Thank you
being
very
with
much.
us today, buddy.
Thank you.
All
It's
right.
always fun being on here, and
Yeah,
talk
so
to
we'll
OTC
we'll
because,
do a
yeah.
lot. I could be your IR guy. I'll give you visibility for your stuff. So,
Hell yeah, man.
all right,
I love
and
it.
you'll pay me in restricted and free trading, so I could just dilute the deal. So anyway, Alex, thanks so much. Good luck on what you're delving into, and appreciate you being with us here today. I'm a
Yeah,
fan.
thank you for having me again. It's always a lot of fun on here with you guys.
Okay, thank you, Alex. That's a wrap. Today's Wednesday, right, guys? So you could join the team in 17 minutes for Morning Edge, and we'll see everyone tomorrow. So good hunting the rest of the day, and don't just count your pips, count your blessings. See everyone tomorrow. Adios. See you, Amira. See you, Saze. And thanks again, Alex.
Thank you.